Hello, this is Paul Whitley with C-Suite Support. We appreciate you joining CEO Talks today. We're going to be talking with Steven Guilfoile with Affordacare Insurance today and see what we can do to help your company. C-Suite Support is a group of CFOs, fractional CFOs. We also work with and have a group of CXOs, CMOs, CHROs, etc. And in our group, we try to help a company grow their business, turn their business around, get financed, whatever they need to do. But our job is to help you be successful. So if you have needs of financing or things of that nature right now, employee retention credit is big. I've got clients that have 20 employees and we're in the process of getting them $100,000 for 2020. And we're going to take that same 20 employees and get $140,000 for the first quarter this year and the second quarter this year. So that company is getting $340,000 in employment retention credits. That is like a grant. They never have to pay it back. So if you don't know about employee retention credit, it is going to be available for anybody that got a PPP loan. And the second part of that for 2021, if you got a PPP2 loan, payroll protection loan, then you're probably going to be eligible for it. So it's not something just to pass off. It can be done for all companies. So if you need help, contact me, C-Suite Support. Now turning around to the guest of the day, I'd like to introduce Steven Guilfoile. Tell me a little bit about Affordacare and let's go from there.
Hey, thanks so much for having me, Paul. So we've been around for 12 years now. We have about going on 50 offices across the country, looking to have about 100 by the end of the year. And we specialize in group health insurance and helping companies keep the same plan, the same deductibles, the same copays, and just pay less money across the board.
Sounds good. And I would have to say that I've had the opportunity of working with you, and obviously that's why you're here. But I've taken Steven into some of my clients, and pretty much across the board we've been able to save some money for the client, as much as 20-25%. We're going to talk about how you can do that. So Steven, when you go into a company, 25, 30 employees, and you said we can probably start with 10 to make a difference.
Yeah.
20, 25 employees, how do you make a difference? Why are you different than Blue Cross Blue Shield down the street or the broker that I can run into and have 400 in a Rolodex for?
Yeah, no, great question. So I guess the biggest difference is we're actually truly there for the client, and we ask a lot of questions that a lot of other brokers don't. So traditionally, I would think of it as your standard group health insurance is basically a guaranteed issue plan, meaning that everybody who's on the plan automatically qualifies, and the only parameters are the number of people and their age and where they live. And so we take it a step further and we take a much more proactive approach. And by being proactive, we not only can almost guarantee that we haven't had a price increase across all the groups for the last 3 years that we touch, but in most cases they actually get money back. So I would look at it as if you've almost been familiar with life insurance, you have like a guaranteed issue type plan, and then you have like an underwritten plan. So essentially we're asking additional questions that can only help the group, it can never hurt them. So everything where credit's due, we give them the credit for that. And so that's where you see these massive savings. Like for instance, a group of 20 people that might be paying about $250,000 a year, $100,000 savings is actually very, very justifiable and very doable.
All right. Well, most of my CEOs that I work with and companies, whoever is going to make that decision, either HR or the CEO, they really don't care about insurance so much as, am I covered? What is my coverage? What's my deductibles? And all of these kind of pieces. Yeah. And then what's the price? So take me through a little bit slower of why do I want to consider change? What's the kind of key things that's going to make a difference of how you're doing it and what you're bringing into it? Like one I just looked at today, they had an out-of-pocket for the CEO was $18,000 for his family. Had a $2,500 for him, but $18,000 for his family. You guys came in and you had $2,500 with the $5,000 for his family. What's the deal, and how are you doing it different to where that CEO needs to pay attention to you?
Well, the normal thing I guess that we typically is when they see stuff like that, the first question is, well, this seems too good to be true. And usually what I say is, hey, we could make it more expensive if it would make you feel better. But in reality, it's truly the fact that we're using actually true underwriting numbers. And I guess that to your first original point, when we do this, when we roll out a group, it costs the group nothing to at least provide other quotes, right? If you're any other type of industry and your whatever material you buy goes up 20% overnight, year to year, it's a good idea for you to have an ability to go out and have other things and shop for, right? That's a typical good business approach. So what we would basically do is absolutely for free, at no consultation cost whatsoever, we can give you a binding number that you can compare against your existing plan. There's no noise to the employees. There's no additional networks or anything that most people would need to change. And so the employees can keep the same plan. Doctors, we can rent different networks or different prescription plans to make sure they don't have any issues with changing. But at the end of the day, when they have a true plan and they have a direct side-by-side comparison, we make it a no-brainer for them that there's really no reason that they shouldn't at least take a look at it.
Well, tell me about your group from a standpoint that I know when I'm talking to you with one of my groups, I want you to go in. That doesn't always work across the nation. You're not in the 48 states or 50 states that you're in. How do you work? How do you bring in your people? Why are your people better? What do you do to make sure you get out there and have a better platform?
Yeah, so the culture that we have is truly second to none. I think the people that we have, truly have the most fun of any other agency, and they actually really, truly care. And a couple of years ago, we were talking about how if you can empower and make your employees happy, they would directly pass it on to the clients and everybody else that they touch. And so I think if you start first with just making sure that your agents are empowered, they are confident, they know what they're doing, and they truly love what they do, and they have a true admiration to actually truly help those people, I think that's the biggest and most important building block to start with. And so then all that gets passed down to the clients, and they get what we give them is unrelentless support, 24/7 access to us. Every single one of our agents has the cell phone that the business owner can call, and if they have a question on the weekend, they can text them. We're always available. So that's probably one of the biggest things that sets us apart as far as agents go.
Well, I know from my own standpoint and from C-suite support standpoint, I don't refer people because I like them. I refer people because they performed, provided a service, took care of a customer, and then I like them. So maybe it is that I do it because I like them, but they've got to earn that trust. So you and I have had a couple of opportunities, well, more than that to get started, but our first couple of opportunities. And I want to say that I was extremely pleased how you handled the client, but the client was more pleased in how much money you saved them. Tell me an example of one of the guys, just without names, that you've gone in, and I know you recently just did a training course with one of the companies that had multiple locations, one in California, et cetera. Mm-hmm. Share with me your thoughts and experience on how that went and kind of savings you did for that company without total dollars.
Yeah. So basically, I think the best way to look at it is, again, kind of the example I gave you where they had a pretty significant increase. And a lot of times the HR and everybody, the CEOs, the CFOs go into panic mode, and now there's a true problem that needs a solution. And so again, to bring us in, we looked at a couple different things. The first one was how the participation of the company, the different locations we had, and there was a lot of different things we could play around based on that. Also, one of the biggest things that we also brought in this case, which helped a tremendous amount, was a wellness plan that we can basically implement. And you could think of it almost kind of like the safe driver discounts you have where they have an app on your phone and you're braking, your acceleration for your car, you get credit where it can only help you, it can't hurt you for your car insurance, right? So we have the same type of thing that we actually give most employees a couple $1,000s a year as a raise by basically voluntarily having this. And then the company, we pay them as well because we know financially that company is going to have a lot less claims. And again, the company is now aligned, right? If the company is saving money, the insurance company, and as of course the actual company as well, right? So if we can financially motivate the employees and the employer to go the direction that we're hoping to get out of it, that was, I think, just alone almost $100,000 in savings right there alone. And again, we're talking 25 people. So it's a pretty incredible opportunity, and then that doesn't even count the other discounts and stuff that you get with the actual health insurance.
All right, well, you touched upon one thing that a lot of companies have no clue of, never heard of, pay no attention to, and if they even heard the expression, probably wouldn't pay attention to. So tell me about your wellness program. What does that mean? I mean, I love the fact I hear all of this stuff. I've got this
Yep.
wellness, and I just renewed my insurance with another company, and they gave me my little token thing that, okay, you can get 30% discount if you don't drive like an idiot. And maybe I drive a little faster than I should on occasion. My
Yep.
wife certainly tells me that. But tell me about the wellness program, how that works, and what does it do for the individual while it's doing all of this benefit for the company?
Yeah, well, as far as my car discount, that's definitely out the window probably a couple of years ago. So I've written out that off a long time ago. But basically, you think of it almost kind of like a credit score that you have kind of with like Credit Karma, and it has that same kind of gamification type of aspect where you actually have a true number that is connected with your health, and it takes all different categories in, from a quiz you take to how active you are and all the different aspects of your health. So it's just how you can truly tie a number, and just by yourself wanting to be better, it empowers you to not only do it, but to be actually visually aware of what you're doing and how it's affecting you, either adversely or positively, right?
Does this provide more services that the employee can take advantage of, or does it tell them how they're doing against their opportunity, or they're just taking care of themselves? And how does that work?
Yeah, so it does all that. So the first thing would just be every single month we have some prompts, kind of like push notifications if they have the app, and it just allows them to take quizzes, watch modules, and basically the thing is, some people, there's 3 reasons that somebody would do it. 1 is because they get paid to do it. That's probably the biggest reason.
Amazing how that
2,
works.
they actually get additional benefits and services that we waive the co-pays, waive prescription benefits and stuff if they do it. And then 3, it actually helps them be a better person, a healthier person that, again, therefore they have less in claims. And so it goes full circle. So even though we're getting at, the most immediate part, which is just the money that they're chasing, long term it tremendously helps the company pay a lot less too.
All right, well, one of our discussions that we had involved increases. We all know we're going to have increases, and some of the policy things that we've discussed, that you were able to reinsure situations and put the companies in a position to where, sure, you have an increase because of just the total economy, total situation, but their base policy is the only thing that got that increase. So that self-insurance, that process that's there, tell me about that and how that works.
Okay, so that's actually probably one of the most valuable and extremely unique things that we do. And again, it comes back to empowering the group, and basically the group now owns the plan. And so from the wellness plan, helping them be proactive and all the different things that we give them access that they haven't seen. So when it comes to increases, again, the biggest thing is making sure that we're underwriting the group and correctly pricing the group how it is a sustainable model. It's not just a bait and switch that it looks like a good rate the first year and then next year jumps up 20%, you're in the same boat you were before. So every single group that we have, 80% of them actually get money back at the end of the year. And the reason we do that is because by the amount that we basically have the premiums to be accounted for, anything below that number, if they have come in less in claims, they actually keep all that money, they collect that money, the business owner actually directly pockets that money, and they can use to buy down their premiums next year, or even just buy a couple of jet skis if they want as well.
Well, in the business, I've worked with a lot of companies to get their companies reinsured, either for their business health or for the business liability, their corporate policies. That's one of the things that a fractional CFO, or any CFO for that matter, should be going into the company to help them in all aspects. It's not just, are your financials in good shape? Are they presentable? Are they to what's called general accounting, accepted accounting principles, GAAP? Those are all important, but it all ties down to what's going to the bottom line. And while it's going to the bottom line, going through all the expense items to see if we've got the items there, have we gone through them? And we go through these things with every company we deal with. So when I go into a company, maintain a company, we're going to shop. So one of the biggest things I found in years past is that virtually every company that I get engaged with, go in to look at, they have somebody that they've been with for quite a while. And they no longer paid attention to anything other than the fact it just renewed. I've still got insurance. Great. However, I'm paying a lot more for that stuff now than I was paying before. So the thing that I've found is that if you don't go out and shop it, you're going to have a problem, because that insurance agent makes money based upon the premium cost. So while that is not universal, it sometimes seems to be. So tell me what you do. How do you prevent that client that you have from getting into that same quagmire of just having an acceptance of the policy renewing and taking all those increases? What happens the next year or 3 years from now? I know you don't want to shop it every year. Probably every 2 or 3 years, that thing needs to be reshopped.
Yeah, so you touched actually on a lot of really good things. The first thing I'll just address is when you're having an agent or a broker, the main difference is what makes us, I think, truly unique is that we are true independent. So there's not a single company that we represent. There's not a single company that we get paid more because we push people here. So we're truly looking after the best interest of the bottom line of the client. So if the best policy ends up being another company, we would have every single reason to move them there because that's what benefits us by keeping them on the books, right? The second thing is we don't get paid based on their policy increasing. We get paid on how many people are on there. So if we can just do nothing more than try to provide more value and increase their bottom line that they can then hire more people, we don't get paid, and actually we disincentivize when their price goes up. And so every single thing are aligned with the same goals that the client is.
So you just brought up something.
Yeah.
I want to reemphasize this because most of the companies that I work with, their policies and the people that work for them, they're compensated based upon the total premium, the profitability of that policy. And I want to emphasize or have re-emphasize here your statement and follow through with that you're paid based upon people on the policy, the number of employees. So you're totally aligned with the company. That right?
Yeah, absolutely.
Well, that's unique to the industry. So we need to pay attention to that, and I want my clients to always pay attention to that because I don't want to be reshopping every year if I don't have to. But again, you don't want to shop every year, but every 2 to 3 years you probably want to be looking at it unless you have this kind of support to deal with it. So tell me, how do they proceed down the road with getting the insurance? Okay, you got them on board, you're taking care of them. Next year you're going to follow through with this. What they're there, when I did self-insurance programs years ago, my first 2 or 3 years, I saved a ton of money. My 4th, 5th, 6th year, I probably didn't save as much and may have actually had some cost increases. Based on how your program works, I don't see that happening.
No, and like I said, in the last 5 years, we haven't had a group that has had an increase. And you've looked at our overall book, we've actually had a negative renewal increase every single year across the board. And so a lot of it's from what I told you. The thing that you brought up that I do want to address on is if somebody has, and again, like this is the thing we're super sensitive to because we have great relationships with all of our clients, right? So if you have a good person, a friend, it could be a son-in-law, a family member that actually is your broker, that is your insurance agent. We are in no way trying to get rid of them or take them out. The thing is that we have certain plans that if they had access to it or knew how to do it, you would already be on that plan. And so when we do give you guys a quote, it's not to take away that relationship. And in some cases, what we've actually done is says, hey, here's $100,000 in savings. And if you really, really, really like your broker that much, you can do a plan with us and just write them a check for $100,000 every year. But most times they don't do that. But what we can do,
I would say not.
what we can do is we can say, hey, we've created the plan, here you go. But if you still want that support and you like that agent, they can still be your broker. We can provide the plan to them that they can still service you. So again, that's another thing that just by getting a quote does not mean that you're discounting or shoving your agent that you've had for 20 years, to the wind. So that's good.
Another major and this is something that's important to some of my clients, and I want to bring this around because I have not been in the position in the past where I had an insurance company that I not only could take into my company to cover their employees, but also to cover their independent contractors. Not at a cost to the company, but at a savings to the independent contractor. And this is something I want to delve into because now you're taking a guy that wants a grown-up job. And by that I mean he's working 1099, but he has to figure out how to take care of his family, and insurance programs and insurance coverage is certainly part of a grown-up job. And they need to have that. They want to have that. And to me, it's a golden handcuff. If you got a good contractor and you're providing them the access to things that he doesn't have out in the general market, I think that's a benefit. Tell me what you do in the 1099 area that is so unique to me that I'm out there telling my clients, let's talk to them.
So there's two ways we can do it. One, it's called our pay nothing, do nothing approach, and they can pay nothing, contribute nothing to the plan, and they can do nothing, but they can provide access to a major medical group plan that those independent contractors now have access to at a much, much, much cheaper rate than they could get on their own. So again, it looks like by taking somebody on board, we work with a ton of trucking companies, roofing companies, real estate agencies, and these are all people that have, high skill level, people that they want to bring on and retain and recruit and help, that loyalty, right? So by offering a plan that they can get cheaper with you than they could get anywhere else, that's a win-win across the board, day one. The second thing that we can do is we can actually add those 1099s to their actual true group plan that they may already have. So when you combine the numbers, it actually is going to help your price drastically go down, better coverage, and again, everybody wins that way too. So there's no contracts, no handcuffs, nothing. It just to help you guys grow and have those solutions there.
Well, I've got contractors that, they don't know a place to go. And I know in my own personal interest, I'm a small company. I have a few employees, and I can offer a policy to my employees that is less than what they can get with most companies. That's a large company. And when I got the quote from you, I'm going, are you kidding me? So that's something I think is a very major thing to an employer. And wrapping into those pieces, what do you do in terms of training, getting it set up, getting portals? How do they do this? Blue Cross Blue Shield. If I go in there, I can go in and see all my claims. I can do everything I need to do. I can see all of my policies as an individual. What can you do with your policies?
So for instance, with your traditional, and it doesn't even be Blue Cross, but any carrier, tradition what they have is heads they win, tails you lose. And what I mean by that is if your claims are great, they keep all the money. If the claims are bad, they raise your premiums every year. So not only do we not do that and you get credit where credit's due, you get the money back if it's a good year, and of course if it's a bad year, there's stop loss involved so it doesn't increase on you. But the major part is every single thing is completely transparent. So when you talk about, the claims every single month, they have accounting, and every single part of every fee associated with the plan is all in there. So they know exactly what they're paying, who they're paying it to, and why they're paying it, and why it makes sense compared to anything else. So really it's tremendously more information that they're getting, and then from that, we're empowering that client to then take action throughout the year to make sure that we're doing the best thing for them.
Well, what would you say for a company to do to where they look at their insurance, they get involved in it? What do they need to do in terms of contacting your company, getting back with you? If you're in Dallas, Fort Worth, North Texas area, or you need a CFO, contact me. But what do they need to do to get a hold of you to get this done?
So I'd say the best way possible, just Google Affordacare Insurance in whatever state or city that you're in. You're going to have the local agent, and again, an extremely competent, probably even a really good-looking agent for that matter. Probably will get back with you.
Okay.
But ultimately, the same information that you're already given your other, that you already get, it just basically who's on the plan, dependents, and if they have a current plan, what plan details are, so we can do an exact apples to apples comparison. And again, when you're doing that, it takes nothing away from anybody else, and it's a true win-win. Just at least put a number on it. And what I'll say is, if you don't have an increase, right, it probably meant that the insurance company pocketed a couple $100,000 from you that they kept because they didn't pay those claims, right? So even if you have a 0% increase, it probably meant that you way overpaid that year, and so they're just hoping you stay. So again, there's nothing wrong, and the single probably best business decision you can make is at least quote it every year, just like you would with anything else.
Well, the last area that I want to get into is I've got some clients that have some pre-existing conditions. You and I talked about that your company has the ability to work with that, to grandfather in, work around, keep involved. Tell me about how you take a company that has employees that they're concerned, they want to make sure that their coverage continues for as long as they need it.
Yeah, and so and I'm glad you brought that up. So there's absolutely nothing that we penalize a group based on the health of it. We are truly giving credit for the good credit where we can give. So again, if we have a company that is in poor health, it doesn't mean that there can't be a substantial savings, because there might be 1 or 2 employees that are in good health, and we can give credit for that. And again, the best way I can look at it is your current plan is, by all matters of numbers, charging you the worst case scenario possible. Because when they don't ask any information or any upfront stuff besides just the zip code and the date of birth, they have to assume the worst case scenario. So that's fine, but we're just giving you every benefit of the doubt and giving you credit where credit's due. So again, nobody is excluded, nobody is uprated by anything. It is truly based on the overall health of the group, and it's some of the greatest things that you could ever do for your employees.
All right, well, kind of wrapping into this, one of the things that's very important to me is gratitude. I am very grateful for all the blessings that God has given me. I want to share that. I want to pay it forward. What are your thoughts? Where do you go when you start thinking about what are you grateful for?
Well, for the easy layup, of course, I'm grateful for you, Paul, for having me on today. And I appreciate you speaking so highly, and the trusted clients that you have, sharing those with us. And of course, it makes us want to do great things. Truly, probably the biggest thing that has changed my life is the quality of the people, and especially the agents that we work with, because this thing wouldn't have happened by itself, right? I work hard, but nowhere near as hard as a lot of these people that are truly dedicated for this. And so the people that I've surrounded myself, been lucky enough to have, call friends and family, that has truly been the biggest blessing. And for that, I can never repay that. I never truly express how much of a difference my life has been impacted in the good by that.
Well, outstanding. Well, I would say in closing here that the more you do for others, the more you get. And the more you get, the more you appreciate. Keep yourself humble, pay it forward, help others. The benefits are going to be there. Paul Whitley, CEO Talks. We'll see you next time.